Wednesday, March 28th, 2018, Monaco 64, home of alternative economics and contrarian views. Before looking at the markets today, I'd like to talk about a book that I read a long time ago. It was actually published in 2008, just before the crisis really escalated, and it's called Bad Money by Kevin Phillips. And it's interesting that he was trying to warn people about the reckless finance, failed politics, and the global crisis of American capitalism. And strange that the timing of the book and the fact that the crisis came, the real big crisis came, in that same year. So I'll look at that, and also what I think about cryptocurrencies, in relation to this book. But before that, let's have a look at the market. Interesting stock market move yesterday. Not surprising to me. After a day where the Dow was up 600 points, which was Monday. The Dow yesterday dropped 344 points. So the Dow lost basically half its gains that it had on Monday. Dow dropped 345 points or 1.43%. S&P dropped 46 or 1.73%. And the NASDAQ composite dropped 211 points or just under 3%. So not a great day for stocks yesterday. I was just reading an article on Zero Hedge by Dimitri Speck. And he says, trend line broken. Similarities to 1929, 1987, and the Nikkei in 1990 continue. So he's arguing that the chart formations for the Dow right now look similar to those markets. So as you'd know, the Nikkei topped in 1989, just below 40,000. And I mean, we still haven't seen that level after almost 30 years. In 1987, of course, we had the 20% crash, well, 22%, I think, in one day. And that's when Alan Greenspan, of course, started pumping the money. The Greenspan put started then, 1987. And then also 1929, of course, October, the crash there. It started in October, but it only bottomed basically in 1932, I think. I'm not sure. But so we're not out of the woods, as I said, in the stock market. Continue to monitor that, of course. This morning, gold yesterday, unfortunately, followed all the other currencies down. Frustrating, but still not concerned about it. Gold is the ultimate financial monetary insurance, physical gold and silver. We dropped yesterday from a high of 1357 early on London to a low of just below 1340 when the US came in. Today we've made a high overnight at 1347 and we're now down at 1341. The other thing that happens as well, it's 8:15 a.m. London, 9:15 in the continent in Europe. When Europe comes in, all the bankers come in, the bullion banks, and they're kind of in charge for now of the gold price. So that's what's going on. So 1341 gold, down almost $4. If you remember last week, I was talking about the 1340 level as an important resistance, which we broke. And now this has become support, 1340. Silver, 1649, down about 3 cents. Range has been 1646 to 1658. The Dow is only up 18 points, so 23,876. So we have been up, we were up 120. That's the high overnight. So we have come off from the highs. So stock market not gaining any traction. S&P 500 is up 1 point, so virtually unchanged, and the NASDAQ is unchanged. In terms of the currencies, We saw the dollar strengthen yesterday against the pound and the euro and the yen, and maybe that's why, you know, the gold price couldn't hold. But right now, the pound is down 8 pips only, or 0.05% at 141.50. The euro is down 0.1% at 123.90. Dollar yen, dollar's up 0.25% against the yen at 105.62. So it looks for now that the dollar is kind of holding on for dear life, in my opinion, and so is the stock market. Crude oil, yeah, 64.70, the WTI crude. I haven't checked the, let's have a look at what the Shanghai crude, sour crude is doing. Let's see how many lots we've traded on the third day of trading in Shanghai. Wow, actually, it's traded 64,572 contracts, the September sour crude at the International Energy Exchange in Shanghai. That's big. If you remember the first 2 days, it traded around 40,000. And even the December contract, that's traded over 1,000 lots. So yes, this is for real. This petro yuan or sour crude contract priced in yuan, and some people say it's gold backed. I don't agree it's gold backed. What it allows, how can I say, sellers of crude to do, they sell the crude on the exchange, they deliver it when they have to deliver, and then they receive yuan. Let's say it's some oil producing country. Let's take Russia. And what Russia will do, they might need those yuan, and they'll keep them. Let's say they have a branch office now, I think, in Beijing, the Russian central bank. They will keep that yuan. But if they have spare yuan and they don't need it, they might go to the Shanghai Gold Exchange and sell those yuan and receive physical gold. That's how, you know. It's not that the yuan and the oil contract is backed by gold, is that you can do this. You might argue that you can do this on COMEX, but I worked for 20 years as a futures and options broker. I did trade gold futures for clients. It wasn't the core of my business, but I always remembered in 20 years, I never saw anyone taking delivery. I remember we had a client. I try to encourage the client to take delivery of silver. My boss on the desk said, no, we don't do deliveries. So COMEX is not geared to delivery or physical. It's not a real physical exchange. It's just an instrument of the bullion banks and the central banks. Believe me, that's what it is. And I think what the Chinese are doing, they're bringing, strange as it may seem, being a communist country, as we're told, they're actually bringing honest markets, honest commodity markets to the system. And one of the reasons I think they're doing this is because of this. They know that this is coming, that the financial markets in the West, in the US especially, in London, are kind of corrupt. They've kind of lost their, how can I say, their real purpose of exchanging real merchandise and goods. It's become a casino. And I think this, what China is doing is bringing honesty back to the market. You will be able to buy the crude contract and take the delivery. You will, sell the crude contract and have to deliver. And if you don't, you're in trouble. You're breaking the rules. And you know what happens in China when people get, charged with corruption, charged for breaking the rules. It's very severe punishment. And I think that's what's going to happen. It's going to make the commodities market more honest. In the West, they've become a casino. Of course, some people take delivery in commodity markets in the West, but that's become it's become an instrument for the banks to control everything with the paper. And I think that China is perfect and Russia are perfect. No, I think they're just trying to. I don't even think they're trying to like usurp the system like the petrodollar, but indirectly they will. But they're doing this more as an insurance to keep their economies going in case this petrodollar system implodes. And so very interesting that it's 65,000 lots. That's quite a lot. And I see now that the open interest for the September sour crude is 6,600. So that's the amount of positions people have, long or short. That's the open interest. So the bond markets yesterday, they dropped. The 10-year yield dropped, so it's back below 280. It's at 277. But I noticed that the LIBOR OIS spread, which is measures like the availability of funding, overnight funding for financial institutions like the too big to fail banks, that's spiking higher to levels we haven't seen in over 6 years. So that's a bit of concern. You probably won't hear that too much in the mainstream media. So that's something we're going to keep an eye on. So yeah, bad money. So I'll read from the jacket here of the book, Kevin Phillips. I guess, yeah. So it says, in this book, in his last book, American Theocracy, Kevin Phillips warned us of the perilous interaction of debt, financial recklessness, and the spiking cost and growing security of oil. Now, in his most provocative and timely book yet, he takes the full measure of this crisis, of which the housing bubble is but one aspect. In its hubris, the financial sector has hijacked the American economy and put our very global future at risk. So this is published in 2008. So he's noting that the financial sector has hijacked the American economy. And that's still true today. It's still true also in the UK and to some extent in the EU as well, or in Europe. And nothing's changed. Look at the guys who are in charge of the U.S. Treasury Secretary, the central bankers, all ex-Goldman Sachs people or, Wall Street people. And he goes on to say, bad money refers not just to the depreciated dollar, but to the dangerous attitudes and flawed products of wayward mega finance. Over the last 30 years, financial services, including the ballooning debt and credit industry, while you would have thought that after the 08-09 crisis, this would have changed, but it's getting worse. He could have written this book today, again, 2018, and he wouldn't have to change anything except talk about the crisis. So he goes on to say, including the ballooning debt and credit industry, have nearly doubled to a record 20% of gross domestic product, while manufacturing has halved to 13%, greatly imperiling the economy. So that's gotten even worse, those numbers. And he goes on to say, also bad are the risk miscalculation of strategic abuses of new multi-trillion-dollar products and vehicles like CDOs and SIV. So the derivatives, that's continuing. So interesting book. I recommend it. I guess it's as applicable and relevant today as it was in 2008, unfortunately. And what's cryptocurrencies got to do with this? Well, I think it's an escape valve by the general public to try to get away from this system, to create its own ecosystem of, for the public, for money, finance. Will it succeed? I think it will. I think we're still in the early days. The blockchain is the main driver behind it, the technology. And just hopefully the blockchain and cryptocurrencies won't make the same mistakes as, our fiat money system. I don't think it will. It's, of course, there are a lot of scams out there, but I think, it's one of the escape valves. Is it going to be the solution to everything? No, it's just going to be a competing system, I guess. And the blockchain is a new technology as well that will become more and more ubiquitous, in my opinion. So yeah, Bad Money by Kevin Phillips. I highly recommend it. And yeah, we'll keep an eye on the markets and see what happens later on. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. And I'll talk to you later. Bye.